See today, after going home, just go and see what all mistakes you have made in today's test and revise those areas. Okay, today itself you do that. Okay. See, the test was basically we were focusing on these areas: public finance, external sector. We'll see it one by one. We'll do questions like that only, and mainly capital market, capital market. And in public finance, lot of questions we asked from union budget 1780. Okay, so we'll start like this. We'll start with public finance. We'll start questions related with public finance, and then we will do questions from union budget. Then we'll do external sector, then capital market. Then capital market we will deal with a very important area, commodity market. Then rest of the topics we will deal. Okay, we'll start questions from public finance. Public finance, see what all questions have been asked and what mistakes you have made. Now take question number 2. It's very relatively, we'll discuss GAR, don't worry, we'll come to it. And first we'll discuss all the major public finance related question. You already know regarding this indirect. Question 2 is related with indirect tax. Question 2 we are dealt already, we are dealt indirect type of questions. But have an idea, just be very clear with the concept direct and indirect tax. So indirect tax are those tax on which the tax burden can be shifted. That's the concept of indirect tax. In that case, see the choice, question number 2. It's a 3-statement question. It's a 3-statement question. Yes, 1, 2, 3 are there. Okay. Now tell me, in relation to service tax, is it an indirect tax? Yes. Why? The burden can be shifted to the customer. The government imposes tax on the service tax provider, and the service tax provider shifts the tax burden to the customer. So service tax is an indirect tax. So if we apply our elimination method, then we can eliminate choice C, right? Okay, now comes to capital gains tax. What's a capital gains tax? Tax imposed on capital gain. Tax imposed on capital gain. Can you shift the burden of capital gains tax to someone else? No. So second is capital gains tax is a what type of tax? It's a direct tax. So second statement is wrong. Now if you know that a second statement is wrong, you can eliminate choice D. D is actually 1, 2 and 3. So you can eliminate choice D. Then what about securities transaction tax? It's as the term suggests. Okay, what is securities transaction tax? It's when you do some transaction in relation to securities like shares, bond, anything like that, the government will impose a tax. Okay, again regarding security transaction tax, you can't shift the burden. To whom it is imposed, they have to pay the tax. So securities transaction tax is a direct tax. It is a direct tax. So 3 is also wrong. So in that case, answer will be, answer is 1 only. Answer is 1 only. Now similar to that, again similar to type of taxation, there is a question related with if you see question number 24, it's related. Question number 24. Again you need to be very clear with that. Okay, the maximum share of gross tax revenue of government of India comes from. So be very clear with it. We already discussed, but be very clear with it. 5 taxes are very important for the union government. 5 taxes are very important for the union government. 2 among them is in the direct tax side and in the indirect tax side. We'll see what are those. Just be very clear with it. Not the value, but who is getting more. Indirect tax, it is corporation tax or corporate tax, followed by personal income tax or income tax. So these are the two major direct taxes. And what about the 3 major indirect taxes? It is excise duty, then customs duty, then service tax. So now service tax is growing. There a time will come, we don't know when it will be, that's after a certain period of time, within few years, service tax will be the major revenue. But presently it is corporation tax. So answer is corporation tax. Answer is corporation tax. Then again a concept related with the tax. A question on tax credit, question number 13, tax credit. We already posted that article on tax credit, but I'll just make you difference between, there are other thing also, like the three things are there in relation to a concept called tax credit, tax deduction, tax exemption. See, we follow a simple logic in relation to economy. What is that? From the term itself, we will get the concept. From the term itself, we can derive, if you are aware of these basic things. We'll see it one by one. Now you see it, okay. What do you mean by tax exemption? Meaning of exemption? Meaning of exemption means you are exempted from paying tax. So the government imposes tax to what? To your income, yes or no? You will get different types of income. The government imposes tax on that income. For example, for corporate income, government will tax on it. Your personal income tax. For the service provider, it is in the form of service tax, but they shift the burden. That's a different case. Okay. Now, so direct tax, in everywhere the government impose a tax. Okay, and certain to promote, see, for different reasons, the government have exempted tax. I'll give you one example of exempted taxes: agricultural income. What is that? Agricultural income. So there are certain reasons why government have exempted agricultural income. You know that first of all it is coming under the state government. It's not under the union government. But even the state government is also not have imposed agricultural income, mainly to promote our farming or agriculture. We know that now also majority of the population are dependent on agriculture. That's the reason why. So there is a social reason behind it, exempting agricultural income. Then for other reasons, for example, in certain areas where the industry will never go and set up a industry, means the corporate will never go. So to promote them to go there, set up industry and bring employment and growth in those areas, the government may provide tax exemptions. Now to promote export, the government may give tax exemptions. We'll deal with it when we will discuss about special economic zone. So it's very simple. Exemption means even though it is a taxable income, the government says that while calculating income tax, it will not consider it. It's exempted. Now deduction, tax deduction. Tax is deducted, or don't take in other way that tax like TDS, not in that way. That is also deduction, means they will deduct you from your source itself. What do you mean by is that? I'll give you an example of tax deduction, like your section 80C. Section 80C says that if you invest in insurance and other saving instruments as from your annual income, so it says that now presently under section 80C there are some provisions. That's why you hear about now so many insurance companies and other institutions saying that okay, we will save your tax. So what is saving your tax? It's not that they're telling not to pay tax. You tell that you invest in this area, in these instruments, and then from your taxable income there will be a deduction will be there. For example is like, see, normally we have learned about income tax slab. There's already a question on income tax slab. Till a normal case is that till 2.5 lakh it is no tax. If you are having an income up till 2.5 lakh, it is no need to pay tax. Tax is nil. But between 2.5 and 5, it is as per the latest budget. It is from in the budget 2017-18 we have reduced from 10% to 5%. But it says that okay, reductions like it says that if you invest in instruments like insurance or saving instruments, 1.5 lakh is 1.5 lakh is tax deducted. So if you are having 4 lakh income or 4.5 lakh, if your income is 4.5 lakh, what you can do is 2.5 lakh is no need to pay tax. Then the rest 2 lakh you have to pay tax. But if you invest in instruments like insurance policies, 1.5 lakh under section 80C, you need not to pay any tax, if provided you invest in these. And then there are other, for business people also, there are some exemptions. That's not important. You need to have an idea what this deduction is all about. Okay, so tax exemption is there, tax deduction is there. Example for tax deduction is section 80C. Now the common thing about tax deduction and tax exemption is that actually what is happening is it will result in reduction in the taxable income. It will result in reduction. See, the government will look into your taxable income. Government will look into your taxable income and impose a tax on it. They will see it. Okay, so what will happen in tax exemption and tax deduction is your taxable income will reduce. You get in the point? I'll take this case. Actually, here your taxable income is 2 lakh, yes or no? Your taxable income is till 2.5 lakh, it's not a taxable income. But if you are having an income of 4.5 lakh, your taxable income is 4.5 lakh or 2 lakh? 2 lakh. But by investing in some insurance policies of up till 1.5 lakh, your taxable income have reduced from 2 lakh to 50,000. Now you have to pay only 50,000 tax for 50,000. Similarly, in the case of tax exemption also, you see that, see, he will be, think about a person who are having income, means a corporate who have been, government have been provided tax exemption. So he is making profit of it, but the government have provided tax exemption to it. But he is having other incomes. So normally in other case, if the government is not tax exempted, you have to pay tax for it. You have, from this income, from this area, and the other income he have got, and totally you have to pay the, this was his total taxable income. But actually what happened because of tax exemption is taxable income have reduced. Just have an idea, in tax deduction and in tax exemption, actually what is happening is there will be reduction in the taxable income. Now when it comes to tax credit, tax credit means like you have to pay, you owe the government to pay this much of tax. Imagine, okay, you have to pay tax for 10 lakh, but due to certain, means the government to promote certain things. For example, take the case of VAT, value added tax. When we discuss value added tax, we discussed about tax credit, yes or no? In tax credit, what actually is happening is that you have paid tax at the final stage, but for the input tax which you have paid for the inputs, the input tax which you have paid earlier, that will be credited. So in the sense that, so how much you owe, actually what you can do is you can deduct or subtract the tax. For example, you take the case of, suppose 10 lakh, imagine in 10 lakh is your income. If tax credit is there, what will happen is you have to reduce. If the government is providing a tax credit of 2 lakh for any purposes, it will say that the government will give you tax credit for certain reasons if you are doing it. Then what will happen is you have to pay 10 lakhs. Since you got tax credit, net tax is 8 lakhs. So what happened is, it is not the taxable income have reduced, rather the tax amount have reduced. That it's not the taxable income, rather the how much tax you owe to the government, that have reduced by the tax credit is deducted or subtracted from your tax which you owe to the government. Just have an idea. It's not that important, but these terms are coming in the news since it is related with public finance, to have an idea of all these things. And already I have posted an article on tax credit, so you might have read that article. In that article, it's all these things is mentioned. For that, just be very clear with what do you mean by tax credit, tax deduction and tax exemption. So this you might have seen that, okay, here in this case it is reduction in the taxable income, and here it is in the net owed tax. That's the, now you solve that question, question number 13. See that question number 13. What does tax credit mean? It's ABCD question, yes or no? It's ABCD question. What is the choice A? Amount of money a taxpayer is able to subtract or deduct, means reduce from taxes owed. See, he owes certain taxes to the government. The tax credit he can subtract from it. So that's the correct statement. We'll see the other statement. Amount of money a taxpayer is charged for after a threshold limit of income, that is not tax credit. Amount of money collected from a taxpayer for a specified purpose as tax on tax. What is that? It is cess. It is cess. Amount of money a taxpayer is able to get refunded for better tax compliance. For debtor back terms, the government will not give you any tax refund. So it's only, so answer is tax A. Answer is A. Then related with capital receipts, very important, we have discussed it. Question number 12 on, again it's related with public finance. Question on capital receipts. We have discussed in detail regarding capital receipts. Now you tell me what is the major, how will you get to know that whether it is a capital receipt or not? I discussed in relation to asset and liability. Now in the case of capital receipts, into what will happen in relation to asset, if there is any liability, you are receiving capital, means you are getting some receipts, but it is creating liability, automatically it will be capital receipts. And what about you without liability? You are getting money without liability, but there is loss of asset, then also it. So two conditions, if any of these condition is there, that is loss of asset. If there is loss of asset or there is liability while receiving receipts, then it will come under capital. Receipts. Now try to solve that question. Divestment or disinvestment. What is the disinvestment? The government selling shares and getting receipts. Now what is the specialty of disinvestment? That it is not creating any, is it creating any liability? No, but it is loss of asset for the government. The government is getting receipts, but it actually what is happening, there is loss of asset. The government share is reducing, of that company is reducing. So disinvestment is a capital receipts. Now see the specialty of this choice also. It's a 4-statement question, and you see the choice. Only one statement is wrong. Now we have to find that wrong. Recovery of loans given to others. Again, you are recovering loan. Is it creating any liability? No. But is it creating any loss of asset? Yes, your loan have been recovered, so your asset have reduced. So 2 is also correct. And third one, fresh loans raised by the government. It's a liability. So already you got the answer. Once, because only one statement have to be wrong. We have not seen it. All the 3 are correct. 4th statement, dividends and profits. Now that's again a receipt. Dividends, is it creating any liability? No. Is it creating any loss of asset? No. Then it is revenue receipts. It's a revenue receipts. Let's say revenue receipts. So 4th statement is wrong. So answer is 1, 2 and 3. 1, 2 and 3. Then question number 44. It's a simple question. But I told you it's very, very, very important also. Now you will get, see, already lot of newspaper articles are coming. We are already posting it also. You will get more article on it. It says that if you have read newspaper, you have seen that when the budget, when the parliament will start its session after recess, this report will be made public and you will know what exactly it will be there. Now tell me that why this panel was set up. The panel was set up to with certain terms of reference. Okay, to one of the references that whether to make any changes to the present FRBM Act. What is the problem with the present FRBM Act? It says that now there is a fixed target. Every year the government have to achieve a fixed target in the form of fiscal deficit and other revenue deficit. Now the government have given an option whether to be flexible enough. So it have given lot of recommendation. It is headed by, this panel is headed by, FRBM panel is headed by, or FRBM committee is headed by NK Singh committee, former, see that's all very important, he was former MP, former revenue secretary. So this is there in the, is coming in the news whenever NK Singh is coming. So just have an idea, this very important committee, and their recommendations also are very important since it is not made public, but will be made public soon. Their recommendation will become important, then I will give you current affair material. Okay. So NK Singh committee is very important. Now related with the, this NK Singh committee, one more committee is there which already question now come, but keep this in mind. Ratan will give you material, Ratan Vatal committee, which talks about, see now this budget or recently the government is giving a big push to digital payment, digital transactions. This committee have given lot of Ratan Vatal committee have given so many recommendations to promote digital payment, okay. So digital transaction, just keep this in mind. Again I'll give you a material, but very important committee like NK Singh committee, Ratan Vatal committee is also very important. So these are the major, see these are the questions being asked from public finance.